Gold prices are entering a critical phase, and the coming week could be one of the most decisive moments for investors, traders, and anyone holding precious metals. Over the past several weeks, gold has been consolidating within a narrow range, hovering between $2,350 and $2,400 per ounce. But analysts now believe that this calm could be the quiet before a major storm. As economic and political uncertainty continues to build across the globe, investors are preparing for what could be a powerful breakout, one that might set the tone for the rest of 2025 and the first quarter of 2026. Next week's market action will likely revolve around three key factors: the Federal Reserve's tone on interest rates, fresh inflation data, and the US dollar index. The Federal Reserve remains the most influential player in the gold market, and even a small shift in policy language can spark massive moves in gold prices. If the Fed signals a potential pause or rate cut due to slowing economic data, we could see gold explode upward, possibly breaking through the $2,450 resistance zone and aiming for new all-time highs above $2,550. However, if policymakers remain aggressive and continue hinting at higher for longer interest rates, that could briefly strengthen the US dollar and create short-term downward pressure on gold, potentially pushing prices back toward $2,320 before another rebound. Investors are also watching inflation data closely. Although inflation has cooled from its peak, it remains above the Federal Reserve's 2% target. Sticky inflation means real interest rates stay under pressure, and historically, gold performs best when inflation fears resurface. With rising oil prices, geopolitical tensions, and ongoing supply chain issues, there's a strong possibility that inflation may tick up again, a scenario that would send investors back to gold as a trusted hedge against purchasing power loss. Globally, central banks are still buying gold in record quantities, signaling a clear lack of faith in long-term fiat stability. Countries like China, Russia, and India have been steadily increasing their gold reserves as part of a broader de-dollarization movement. This trend adds an invisible floor under the gold market. When central banks accumulate gold, they reduce available supply in the market, supporting prices even during corrections. Analysts say this could make gold's next rally even stronger, as both institutional and retail demand align in the same direction. Beyond the central banks, individual investors in the US are also turning their attention back to gold. With stock market volatility increasing, bond yields fluctuating, and real estate showing signs of cooling, gold is regaining its reputation as a safe haven. Online searches for gold price forecast and gold prediction next week have surged, reflecting a wave of new curiosity and concern. Many Americans are asking, is now the right time to buy gold? For long-term investors, the answer might be yes, but timing matters. From a technical perspective, traders are focusing on several crucial levels. The first is the $2,400 psychological barrier. If gold breaks and sustains above that level, it could trigger algorithmic buying and short covering, sending prices quickly toward $2,480 and beyond. Conversely, if gold fails to hold its current range and falls below $2,320, that might trigger temporary panic selling, but many view such dips as golden buying opportunities. In past cycles, such pullbacks have consistently been followed by major rallies. Meanwhile, silver, often called gold's little brother, is also showing signs of brewing momentum. Some analysts predict that silver could outperform gold in percentage gains once the next leg of the bull market begins. The gold-to-silver ratio, currently hovering around 85-1, suggests silver may be undervalued. If gold breaks higher next week, silver could surge past $30 per ounce in the weeks that follow, adding another layer of excitement for precious metal investors. Another major driver to watch next week is the geopolitical situation. Any escalation in international conflicts, trade tensions, or global instability typically pushes investors towards safe haven assets like gold. With elections approaching in several key economies and rising uncertainty around global debt levels, even a single unexpected event could trigger large inflows into the gold market overnight. If gold manages to break through resistance and close above $2,450, many analysts believe a fast run toward $2,550 or even $2,600 could occur before the end of the year. On the flip side, if selling pressure emerges, the 2,330 range is expected to act as a strong support base. Either way, experts agree, volatility is coming and opportunities will follow.